Well, first of all, I think it makes sense to define what is actually an eNote. eNote is an electronic equivalent to a paper-based promissory note. Now, a promissory note is an instrument that is a security and has many functions. One is the function as a payment instrument, being a buyer and a supplier, but also as a debt or credit instrument, which means a borrower and a lender. And thirdly, you can even add it's a collateral instrument, or it can function like a guarantee. The beauty is it is fully standardized globally, based on common law, but also the Geneva Convention, 1930. And it is today fully understood. It is a very uncomplicated security which is negotiable, transferable. Now, if you look at what are the other methods, so it could be that you look at factoring, reverse factoring, which is very often used in trade finance, open account trading. The beauty is that you can at source securitize payables, but also purchase orders, pre-shipment, post-shipment, and transfer them to the holder of the best holder, be it a fund, be it a bank. So it's becoming negotiable, and that means it is transferable, and this means for many investors that they can actively manage their portfolios and their balance sheets. The other benefit is that everybody knows it already, and the benefit is that it's fully electronic. That means you don't need to use paper anymore in any way or form. And that is a big advantage if you look at global scalability. I think life is sometimes a bit funny because I used to work for an SCF, as a supply chain finance house, and then I had discussions with some bankers, and then I said, all the solutions I see have always one or the other disadvantage, which seem to undermine the overall business case. And then they said, Frank, what you're looking for is actually the bills of exchange or a promissory note. But nobody wants to see paper. And then I basically started 3.5 years with some self-funded legal analysis and so forth. Is it possible? And then I realized that, in particular, the UNCITRAL model law on electronically transferable records was already in place, and then the Kingdom of Bahrain started, and then this was a bit of a coincidence, parallel thinking. It's a privilege. I think we have been acknowledged also in Switzerland, but to come to this region, and ADGM obviously has enacted the electronic transaction regulation, which is a legal basis for electronic promissory notes and also negotiable instruments. It's for us it's a great recognition, and we are fully dedicated to ADGM in particular and the ETR, because that is a legal basis which we can use not only in the UAE, in the GCC, but also MENA. And from that perspective, it's a perfect match. Well, in the first instance, it's a model law, so it's not a convention. The model law, I think, has, through the work of many NGOs, UNCITRAL, ICC, WTO, many others, got attention by governments. And you can see that Singapore has now enacted the Electronic Transaction Act, the Kingdom of Bahrain, the first one, ADGM, and we see now traction, in particular in the consultation period in the United Kingdom, or England and Wales to be precise, and the German government is looking at this. Plus, G7 has made a commitment with regards to the model law itself, to enact it. To answer your question, it is the fundament. If we all create tokens, and these tokens have no legal basis, the trust of investors and or counterparties is not very high, and the adoption will not be that high. There are thousands of proof of concepts around the world, but they all basically have the problem the legal framework is not there. So this is fundamental. I think what we see at the moment is that the overall movement of the trade finance, or trade in general actually, industry, is driven very heavily by either big players like Maersk, IBM, but also the NGOs like the ICC. So the ICC DSI, Digitalization Standardization Initiative, is very important. Why? Because although you have now the legal basis, you also need to make sure that you have interoperability, because you have otherwise silos. So you have one standard here, one standard there. So I think we can say that the e-bill, the electronic bill of lading, which is a negotiable instrument, or the electronic bills of exchange, or what we do, the electronic promissory note, will probably have fundamental implications on how we trade in terms of efficiency, global reach, and more importantly, the complexity. If you look at the letters of credit, I think you will see that they are in the future not as used in the same volume as today, much lower. I mean, digitalization has always very similar drivers, right? One is automation. One is disintermediation. I think we will see that a lot of players might not be needed anymore to put a stamp on something or just simply sign something. It's going to be electronic, and maybe they are not even needed in this value chain. So the value chain will change. The other factor, I believe, is that with digitalization, you get global reach. Today you have a fragmented picture based on legislation, but also on electronic solutions. And I think this is going to change, and I think we are moving into another phase of globalization, which is different to what we have been experiencing in the past. And standardization is key here, in my view. And maybe I like one comparison, if I might just put this in there. If you remember, after the Second World War, we had something called the containerization, right? And what happened is that a lot of the bulk cargo was basically turned into container shipments, and that led to a complete overhaul of the entire value chain, from rail to air to ship, and the efficiencies and the cost of transport dropped to a fraction of what it used to be. I think this is going to happen here too.